Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Sedan. This week we're discussing some planning tips for certain Tax Cuts and Jobs Act provisions that will be sunsetting in 2025. We'll be covering more of these planning tips at Spidell's Federal Tax Update webinar on January 4th and 5th. For details on topics covered and to get registered, go to spidell.com under webinars. The Tax Cuts and Jobs Act was passed into law on December 22, 2017, and contained more tax provision changes than any bill since the Tax Reform Act of 1986. Most of the Tax Cuts and Jobs Act business provisions were permanent, while most of the provisions dealing with individual taxpayers are scheduled to sunset on December 31, 2025. Here are some tips to plan ahead for a few of the provisions that will be ending in 2025. The itemized deduction for state and local taxes is limited to $10,000 per year, or $5,000 in the case of married taxpayers filing separate, for the aggregate of state and local income taxes and property taxes from 2018 through 2025. As we approach 2026, taxpayers should consider pushing off at least their fourth quarter 2025 state estimated tax payments and property tax payments into 2026 if possible. All miscellaneous itemized deductions that were subject to the 2% floor were suspended under the Tax Cuts and Jobs Act from 2018 through 2025. This includes tax preparation fees unless they can be allocated to Schedule C, E, or F, unreimbursed employee business expenses, home office for employees, union dues, out-of-pocket expenses and uniforms, continuing education expenses, investment advisor fees and/or asset management fees, and attorney's fees, among other things. Even though the federal deduction for 2% miscellaneous itemized deductions is suspended until 2026, many states still allow these deductions. Most tax professionals have continued collecting information pertaining to these deductions because of state tax deductions. As we approach 2025, taxpayers who have 2% miscellaneous itemized deductions can once again try to accelerate income into 2025 to benefit from lower tax rates, but also push off expenses into 2026 when they will once again be deductible. Also, by accelerating income into 2025, taxpayers will be able to reduce their AGI in 2026, which will reduce the non-deductible portion of their 2% miscellaneous itemized deductions. The Tax Cuts and Jobs Act nearly doubled the standard deduction. Starting in 2026, the standard deduction will be reduced to its pre-Tax Cuts and Jobs Act levels plus inflation from 2018. The 2026 inflation-adjusted figures won't be released until fall of 2025, but we can expect the 2026 standard deduction to be reduced roughly in half from wherever the 2025 figure ends up. The reduced standard deduction will mean that many more taxpayers will once again itemize their deductions. With the multiple changes to itemized deductions also sunsetting, it may be time to start re-educating clients on their allowable itemized deductions, such as the restoration of the 2% miscellaneous itemized deductions and the elimination of the $10,000 state and local tax deduction limitation. Plan ahead for your own increased workflow with more clients taking itemized deductions. It'll take longer to prepare income tax returns, and your preparation fees should be increased to match. Spidell's 2023 Trust Webinar Series is 7 webinars that will help you understand and prepare trust returns. Order all 7 webinars at a discount or pick individual courses at the regular price. See the course listing and get registered at spidell.com under webinars. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.